If you own shares in any Nigerian bank, GTCO, FCMB, Zenith Bank, Wema Bank, there is something important happening that directly affects the value of your investments. The Central Bank of Nigeria has been rolling out sweeping banking reforms focused on something called recapitalization. And depending on which bank you own, this could mean your dividends are protected, your share value has increased, or in some cases, you need to pay very close attention to what happens next. Today, I'm breaking it all down in plain English using 4 banks that I personally track, so you know exactly what these reforms mean in your portfolio. I am Victoria Abioye, Money, Mindset and Life. Let's get into it. First, what does recapitalization actually means? In simple terms, the CBN told every bank in Nigeria that they need to have a minimum amount of money sitting in their capital base to be allowed to operate at their current level. The target depends on the type of license. International banks requires 500 billion naira minimum, while national bank requires 200 billion naira minimum, and regional banks 50 billion naira minimum. Why did the CBN do this? To make the Nigerian banks stronger, more resilient to economic shocks, and more competitive globally. A bank with a stronger capital base can lend more, absorb more losses, and attract more international businesses. In theory, this is good for shareholders, and in practice, it depends on how your bank handled it. Let me walk you through 4 banks specifically. GTCO, Guarantee Trust Holding Company. You know I own GTCO shares, and I bought them during the public offer. GTCO raised 369.5 billion naira through a public offering and a rights issue, pushing their capital to 504 billion naira. They cleared the 500 billion naira international bar early. And the results for shareholders, GTCO's market capitalization surged over 4.72 trillion naira. Year to date, the stock is up over 42%. And their dividend distribution remains stable because their earnings are strong and they cleared the regulatory hurdles comfortably. If you own GTCO, you are in a very good position. Zenith Bank executed a combination of rights issues and public offers, raising 350.46 billion naira and pushing their capital to 614 billion naira. Year to date, Zenith shares are up 84.4%. And because they cleared the bar with significant room to spare, Zenith Bank shareholders are safely positioned away from any dividend restriction penalties. FCMB cleared the hurdle right before the deadline, combining a public share offer with a strategic sale of a minority stake in an asset to reach 509.3 billion naira. This secured their international license status and protected shareholders from the risk of a forced merger or a license downgrade. However, FCMB's capital level is closer to the minimum than GTCO or Zenith. If you own FCMB shares, keep a close eye on their half-year and full-year earnings reports. Watch how much profits they retain as a buffer versus how much they distribute as dividends. Now, Wema Bank. And this one, I am particularly excited to talk about because I also own Wema Bank shares. And honestly, their story is one of my favorites. Unlike GTCO, FCMB, and Zenith Bank, who targeted the 500 billion naira international license, Wema Bank made a deliberate strategic decision to focus on the 200 billion naira national license threshold. And they didn't just meet it, they cleared it a full 6 months ahead of the deadline. Here's how they did it. A 150 billion naira rights issue that was heavily oversubscribed by existing shareholders. That means shareholders like us believe in the bank enough to put in our money, plus a 50 billion naira special private placement from institutional investors. And this is the result. Wema Bank's total qualifying capitals hits 264.7 billion naira. That's a 64.7 billion naira above the minimum requirements. Now, what does that mean for shareholders? Year to date, the stock is up 49.26%. Over the past year alone, the stock has climbed 86%. Their market capitalization has now crossed 1.22 trillion naira, officially making Wema Bank a member of Nigerian's trillionaire banking club. And dividends, following a 116% surge in profits before tax, Wema Bank paid shareholders a final dividend of 1.25 naira per ordinary shares in May 2026. And because they have a healthy 64.7 million naira buffer above their regulatory minimum, the CBN is unlikely to restrict future dividend payouts. Oh, and one more thing, Wema Bank just won the 2026 Euro Money Award for Nigerian Best Digital Bank for Consumers. The Alert Digital platform is directly benefiting from this stronger capital base. If you own Wema Bank shares, you have every reason to be proud of these investments. So what does this actually mean to you as an everyday Nigerian investor? 1. Share dilution is real and manageable. When banks raise capital through issue rights and public offers, they issued new shares. More shares means each existing shares represent a slightly smaller percentage of the company. However, if the bank used that capital to grow, the value of your shares can still increase overall. GTCO, Zenith Bank, and Wema Bank are all proof of that. 2. Not all banks are equal right now. Banks that cleared the hurdle comfortably, like GTCO, Zenith Bank, and Wema Bank, are in a stronger position for dividends and growth. Banks that just barely made it carries more uncertainty right now. 3. Dividends are safer at some banks than others. GTCO, Zenith, and Wema all have healthy buffer above their regulatory minimums, meaning their dividends payments are well protected. FCMB shareholders should monitor earnings reports more closely. 4. Strategic decisions matters. Wema Bank's choice to target the national license rather than chase the international threshold was a smart, disciplined, strategic call. It allows them to focus resources on what they do best, digital banking in Nigeria, rather than overextending themselves globally. That is the kind of management decision that protects shareholders long term. The CBN banking reforms are not something to fear. They are making Nigerian banks stronger and more valuable long term. GTCO up 42% year to date. Zenith up 84% year to date. Wema up 49% year to date. 86% over the past year. These are banks that embraced the reform, raised their capital, and are now rewarding shareholders for their patience. That is exactly why I always say, invest in fundamental strong company and let the long story play out. If you own shares in any Nigerian bank, go and check their recapitalization status. It is publicly available on the CBN website and on the NGX platform. Know what you own. Drop a comment below. Which bank shares do you currently hold? And have this reform affected your investments? Let's talk about it. Share this video. There are shareholders in your circle who don't fully understand what these reforms mean. Send it to them today. Subscribe if you haven't. Follow me at the Victoria Abioye. I'll see you in the next video. Let's keep building together.